So, hello guys, so nice to have you. Jeena Sikho is a company which we'll be discussing today. And the reason we're even discussing this company is pehle to I like the company a lot and what it is doing, the scale up it has been doing, which frankly has been unbelievable in the sector it is in. So, hospitals traditionally don't have such a business model. The unique thing about this business model is that execution is of course top notch. Nothing happens without good promoters and them executing. But just the very nature of this business, makes it one which is likely to win and win big. So first things first, the company is selling for around 4,500 crores. It's an SME company, so if you ever wish to trade in it, you'll have to buy it in lots of 90. So they're the leader in Ayurvedic healthcare, and the guy leading the show is Mr. Manish Grover. You can just search about him on YouTube. You can see a lot of content about him, and this guy walks the talk, and he's very passionate about his own business. So coming to the core operations, they sell Ayurvedic medicine and also healthcare services. So they have hospitals, clinics, and daycares. So when they started out, they were not into healthcare services. They were actually a product company. They were selling Ayurvedic medicine as a kits and all, the kits of let's say healthy detox kits and all those things. So even the product sales have a 90% plus gross margin, and this is a very good business by itself. But talking more about the hospital business, which makes it a unique play, is the very low capex needed to set up per bed. So, in a recent con call, they even said that they can do it for less than 2 lakhs per bed, setting up an entire hospital of, let's say, 100 beds. To just put things into context, an allopathic hospital will have to spend at least 15 to 20 times this amount per bed, and their revenues per bed per day will not be 15 to 20 times. So this company has a revenue in ARPOB per bed is around 80 100 rupees. So that's basically what they're charging per customer per day. So in an average allopathic hospital, this would be around, let's say, 40,000. So that's like 5 times this. Or in a very high end hospital like let's say Max Healthcare, you'll have it around 80,000. It's still a 10x, not a 15 to 20x, which is the difference in their setup cost. So operational cost as well, this model is very, very light compared to an allopathic hospital, जहाँ पे just to have day-to-day screenings, जो machines and all import होती हैं, they are very, very expensive. And furthermore, it is a setup time which is very, very uh, low in this case of Ayurvedic hospitals. So अगर मुझे एक hospital बनाना है, so I make the most money the sooner I get it operational. Not if मेरा 2 साल उसमें capital अटका हुआ है without, and I'm bearing all the cost of my expenses of course setup करने में, but I start realizing any profits out of that in let's say year 1 or 2. So मेरा 12 to 24 months तो पैसा वहाँ पे पूरा अटका ही रहा without any return to me. But in this case, you can acquire a hospital and get it running in just a couple of months. इनका इतना asset light model इसलिए है because they don't even buy the property. So let's say an allopathic hospital is setting up a hospital, and उनका जो equipment उनको install करना है to make the hospital operational, that itself is a huge amount. So they would just also buy the building and everything. It does make sense for them to do so, but uske liye they have to fund their capex. They have to take some debt or dilute their equity. And personally, I'm not a big fan when that happens. So they're very asset light. That's the crux of the matter. And honestly, an investor jisko uh, who's not investing a huge amount in this, I guess he doesn't even have to worry about all of this crap, right? It's not crap, of course, but just looking at the ROCs, 71%. So no allopathic hospital has even close ROCs. These are unbelievable numbers for a hospital. So just knowing that all of this drama, all of this storytelling, it reflects in this number right here of 71%. That's all you need to know. So about growth, they have done a revenue of 324 crores in FY24, and they're on track to do 450, which is their guidance for this year. I think they can exceed it by a bit as well. The way they're going, and their current occupancy as of H2 was around 50%, which they'll also inch up higher significantly. So because of all this operational efficiency, their margins have been increasing at a wonderful pace. So अगर 2022 का देखें and 2024 का देखें, so their PAT margin literally tripled. And even this year, FY25, they're planning to close at around 25% PAT margin, which, so a simple calculation so the market cap is around 4,500 crores at this point, of course. And the PAT will be somewhere around 112 crores if it's 25, if they do 25% PAT margin, that is. And they also achieve their revenue guidance of 450 crores. So that's the PAT they'll do. You're roughly at around a 40 price to earnings 3 months ahead. मतलब when FY25 closes, तब की earnings लेके, and if the price stays the same, you're paying 40 times the earnings, which for a company growing at 40%, which I think is not expensive. So first of all, it's a consumer facing company. They have a very big moat. They have a very big reputation. So the profit pools are very secured for some time to come at least. They have a very established brand as of now. Also, there are no other listed players in this. Just being the market leader and also gaining market share from competitors tells you that it is a business with a very strong moat, and it is one which will get better with size. Further, the government policy tailwinds, they're not just tailwinds, they can also be risk factors because a lot of things are contingent on being insurance friendly, being compliant, and if whether or not the Ayushman Bharat scheme includes them. Furthermore, they have a very big growth driver, which they recently talked about in a con call. So they are planning to launch an OTC product range. So abhi they're only selling the medicine mainly उनके ही हॉस्पिटल्स पे लोग जाते हैं. These are people. Okay. एंड इनका ही आदमी इसको ट्रीटमेंट देके मेडिसिन भी यहीं से लेता है वो. बट OTC प्रोडक्ट्स का मार्केट इज मच लार्जर देन दिस बिकॉज दे कैन पोटेंशियली टारगेट कस्टमर्स जो अभी इनके नहीं है. And if they like the product, they can also make them customers of the hospital because the brand is same, Jeena Sikho. So they're doing a lot of trials. They have some approvals as well. They're launching, in a phased way. So if this does well, this will all the growth assumptions that we made, right? That they'll grow at 30%. All of that does not really take into account success of this. So if this succeeds, if this is a big thing, because the market for OTC products is very, very huge. If you look at the big players in this, let's say Dabur, right? So Dabur does a, I don't even want to say it, right? It's a huge number. It's a very big number that they do in revenue and OTC products. So even a small part of that market, if they can capture this portion in, let's say, the next 2 years, they'll do extremely well. But you cannot rely on this until you see some traction. And if things change, you can always just sell, right? You can get out. So instead of just in India, they're also expanding in other countries. So I think it was only today that they released this news of incorporating a company in UAE. So this is all in line with their plans to expand overseas and just move beyond the Indian market. So as per the promoter who knows the company the best, of course. So he said in the con call कि लोग दूर से ट्रैवल करके फ्लाइट लेके इंडिया में आते हैं. सो इफ आई एम सेटिंग अप अ हॉस्पिटल इन दुबई, पहले तो वहाँ पे एवरेज कंज्यूमर की पेइंग कैपेसिटी ज़्यादा होती है. एक्सचेंज रेट्स में दे गेट सम बेनिफिट एज वेल टू चार्ज हायर. And the customer who is ready to take a flight and come to India for their treatment, he will be happy to pay, let's say, the treatment cost and the cost of flight for the convenience of not having to fly. So they can just charge a lot more. They can probably move their margins even higher from here if the international expansion pans out. So, of course, a big thing to track is the regulation around Ayurvedic healthcare. Needless to say, if things turn sour, will be sure to get out of this. And in terms of valuation risk, I personally do not see a big valuation risk because I think it's still reasonably valued. It's not a very expensive company. Now, you might say that the stock has run up so much. It has literally 20x from where it IPO'd in just 3 years. But first of all, that time it was not growing as quick. And secondly, uh, I think the stock just it was just extremely cheap a year ago. That's all I'll say. It's not expensive right now, but it was extremely cheap a year ago. So that's why it might have the illusion that it's very expensive, relative to last year. But I think that is still a fair value for what you're getting. And that's just my opinion. And of course, it's not a buy sell recommendation at all. Competitive risks, I don't foresee many right now, but if they pop up, we'll be, sure to take note. Operational risks, yes. So the projections on the valuation, they have also factored in the margin improvement. So if for some reason they have to spend more than anticipated, so I would not like for the margins to go down in this, because then it will become just like any other hospital that is doing capex, reducing margins and growing their top lines, which is still a good business, but it won't be so unique of a business then. Aggressive guidance, yes. So if the market is expecting 40% growth and they do 30%, you could argue that 30% growth at 40 times is still a very good deal for a consumer facing company. But since they have given this guidance of 40%, I don't think the stock will make much money by itself. 30% is not a bad number at all. But if the management has given a guidance of 40%, they cannot, afford to not do this, because then the stocks don't make money. That's just my experience. I could be wrong. So overall, Jeena Sikho presents a very unique investment opportunity, and I think it's a sustainable growth story. It can grow for the coming decade at least if they don't mess up, and if there is no regulatory hurdle by the government. And so far, the government has been on board with promoting Ayurvedic healthcare, so I don't foresee many things, at least in this term of the government. So overall, this is a company that is worth tracking for the long-term potential it holds, and I think the downside is pretty limited. But of course, if things change, the downside is potentially always 100%. But the upside, I feel, is very favorable in this deal. And if the company does well, I think the market is going to reward it. Even if the promoter comes out and says ki FY 28 tak will do 1,000 crores of revenue, right? And the PAT will be 300 crores at 30% margins, right? So the stock price today, even if he says this today, it won't just move up suddenly to the extent of pricing this situation completely. So the markets in a bull market, they look at earnings 3, 4, 5 quarters ahead, and they price the stock very highly on a trailing basis. But in bear markets, or in tough markets, as we're going through a tough phase now, a relatively tough phase, the markets are not going to likely project the earnings into the price uh, more than, let's say, 2 quarters ahead. So even if the promoter comes out today and he says, I'll do this, if he actually executes this, the price will likely move higher. A management today of a company, this is the management, they say that my company X will grow at 40% for the next 5 years. So every year when the earnings grow at 40%, the stock gets rewarded. So if this was already in the price and the market was totally convinced about this 40% growth for the next 5 years, executing that given guidance should not have resulted in a price move up. But of course, market ने बहुत लोग देखे हैं who just talk and don't walk the walk, right? It's an imperfect world. Many things can happen. So the market will never perfectly price in everything. And if you see that everything is priced in, so then it's not that good of an opportunity, which I don't think is the case with this one. But of course, this is not a buy sell recommendation. My views are only relevant till today. If anything changes tomorrow, I'll change my views. So that is it, guys. We'll do another business, I guess. And And I'm also thinking of covering some interesting, quarterly results and companies that were not so interesting earlier but have become interesting after their recent results. I think tracking results is also something that can be done on this channel. So yeah, that's it. Thank you.